Hi, this is Nick Inman from VolumeProfileTrader.com on Tuesday, November 1st, and let's jump into the S&P 500 here. We have had a rough 2 days, start of the week. Market on yesterday, Monday, opened up lower and traded lower for the rest of the day, triggering momentum overnight, last night, and into this morning until we made a low around 1208 in the S&P, and that was a level of support, a level of interest for buyers, and you can tell because we started balancing today. Although we were down 2% for the day, the market found some type of support, and every time the market got around the 1210 level, the market bounced and had a nice run up, at least 15 points or so every time. So that's a pretty good trading opportunity in the market, and it looks like we're going to see more follow through to the upside, which leads me to believe that this current downtrend that we're experiencing is over for the time being. And the reason why I say that is if you look at the point of control for the day, you can see that it formed at the bottom half of the range, and at the end of the day, that was, and our follow through to the upside, that was a big key. And normally speaking, when the point of control is at the bottom of the range and buyers can, it keeps bouncing at that level, that shows you that, we have a chance to really get some momentum going to the upside. And likewise, if the point of control is at the top of the range, it would be like it's top heavy and we're waiting for, the bag to drop, basically. So going into tomorrow, I think it's right to have a slight upside bias, but it's going to be interesting to see if the market can recapture momentum and close the gap that we experienced from yesterday's close, which was around 1245 on the S&P, and also this 1230 level that we struggled with today. So those are our two targets to the upside. Let me zoom out to show you, other than the fact that we held support and formed a point of control at the bottom of this range today, why it made sense to be a buyer on weakness today. Okay, this is a 2-hour chart of the S&P, so nothing's changed other than we're zoomed out a little bit to see what the bigger picture is doing. And if you remember, back 2 weeks ago, we had this sideways consolidation and a nice breakout to the upside. Well, that consolidation led to some nice bouncing and opportunity to find some good levels to get long and ride it to the upside. Well, now we're this move here was a breakout and then a test of the breakout, and we got our follow through. Well, now we're seeing the bigger time frame pullback, and we should expect to see some support at these levels. If these levels don't support, then really, and when I'm talking about these levels, really from 1190 and north. If these levels hold, then the uptrend, this short-term uptrend that's lasted for the last month, it remains intact, and this weakness will be a good buying opportunity. But for right now, we have our sense of support, which you can see this trend line was a good support line, and also this high volume area. If you're looking at the volume profile chart, the top of it, which is around 1215, was also good support. And we're looking in this general area for the market to hold. You can see the Fibonacci moving averages, their exponential moving averages. They're still, you have the smallest one crossing over, but they're all flatlining, so that leads you to believe that this market's going to balance at these levels some. If it does balance at these levels, it makes sense to buy the weakness and sell the rallies. Take your profits on some rallies because it's going, considering the down move we just experienced, there's people who haven't sold, they're going to be wanting to sell into strength. So you just have to expect that and realize that it may, but it may not be the same in terms of easiness to make money as it was last month. So I wanted to show you one more time frame of the S&P 500, and that's the daily chart. So the S&P 500, really, it's doing what we want it to do on a daily time frame from a buying standpoint. Sorry. We have our continuous ebb and flows to the market. And what I mean by that is, markets go up and markets go down. And, whatever side you want to trade from, that's fine. But just realize there's a flow to the market. And, if there's an uptrend, that doesn't mean that there won't be a pullback. But the important thing is if it is an uptrend, those pullbacks should be bought. And that's what we're experiencing right now. We're experiencing the pullback. You can see the 55-day whole moving average. It's pointing straight up, so that's good news. Short term, we definitely have an upside bias. And we're coming back to test these levels that we broke out from. And that's what we want to see. The next move we want to see is support and a continuation to the upside. If we don't get that and we start breaking down, well, that's giving you an idea of what the market's doing. This was an overshoot to the upside, and this balance range is back in play. That's not what I think this is, so it really looks like this market has some upside potential. The whole moving averages, slowly but surely are getting some upside bias, and the biggest whole moving average I have on this screen, the 377-day, it's still moving down. So a little conflicting signals, but there's still opportunities. Remember, short term, it looks like we have some potential upside to the market, but we don't know how much it's going to be. If we're gonna get stuffed at this 1230 level, or make it to 1245 and continue higher. Or really, if these levels just don't hold and we keep moving to the downside. But remember, we are back into that support level, so it should be an opportunity to get long, just if anything, for a short-term bounce. One other name I wanted to cover, because there's been high interest in it, is silver. So let's check out the silver trade. Okay, here we are on silver. This is a 1-hour chart, and what we're looking at here. Well, first things first, let me zoom out one more time. First things first is, over the weekend I was talking about these multiple bull flag patterns that we saw. One formed here, and we got our move higher. And then another one was forming here. And I was saying in the video that, expect the expected, expect another move higher. And on that chart, I wasn't using the volume profile. I was just using, a simple chart, basic, nothing special about it. And sure enough, this is a perfect example of why volume profile makes sense. We failed against the 6-month point of control. And what that shows me is there's still, selling pressure into strength on silver, despite the fact that we've had a nice move off the bottoms from $27 to $34, $35. So what we're seeing now is a little bit of a, conflicting signals. We don't know what the overall trend is because, silver is really balancing, and that's what it appears for right now. We need more information to see if this, short-term uptrend is going to continue higher, or if we're just going to see more sideways consolidation or even more selling pressure and we move lower or back to these lows around $30. So one thing to look for if you want to trade silver is, right now our downside is our today's lows, which is, say, $31. I would have a stop around $30.90, and your upside target is around $33.75 to $34.50. And anything more than that is, you're going against recent highs and you're going against resistance. So expecting more is a little, I think it's a little far-fetched, and it just doesn't make a lot of sense. That's being greedy. Now if it does break out, then that's fine. Just the likelihood of that happening, the probability is fairly slim due to the fact that we've gone from 34.50 down to 31, about 9% in 2 days times. That's pretty substantial move, although it is silver, I get it. So anyways, I hope this helps. I want to give you an update on the S&P 500 and silver. Sorry about not getting a video last night. Halloween was with the family. So anyways, have a good night.